Hey, small business owners, welcome to Monday Morning Metrics. So glad that you are here. My name is Rebecca Berneck. I am the founder and big head of Officeheads, a financial management firm located in Evanston, Illinois. Every Monday at 10:30 Central Time, I jump on Facebook Live and I talk about all things finance. How do you take your numbers and apply it to your business for growth? How do you do good, efficient bookkeeping? How do you select a KPI? All the wonderful, great things about your numbers I talk about. So today, I'm so glad you're here. Today, I'm going to talk about your chart of accounts. What I'm ultimately talking about is your profit and loss statement, because I think your profit and loss statement is the most beneficial financial report that you can use to understand the health of your organization. A profit and loss statement has the money coming in, the money going out, and what you have left over. And ultimately, as a great and fiscally wonderful business, you really want as much left over as possible, because you get choices to be able to do that. That's your profit. So your P&L is your go-to financial report. Now, the thing is, if you're using QuickBooks Online or any QuickBooks file, the chart of accounts that comes stock with QuickBooks, it's okay for your CPA to file taxes, but it really makes it difficult for you to make some good decisions, because it's just not organized the way that a small business owner should really be looking at their books. So let me take a couple steps back and talk about your chart of accounts. Your chart of accounts is like, it's like a filing cabinet. Let's say you have a metal filing cabinet in the corner of your office, and you go out and you buy something. You go to Office Depot and you buy some pens, and you have a receipt. You take that receipt when you're done, you walk over to the filing cabinet, you open up, you've got hanging folders and manila folders. You go, okay, I just bought some pens. It's office supplies. I'm looking for my office supply folder, and you put it in there. Boom, office supplies. Every expense should go in that filing cabinet. Every bit of revenue you bring in should go in that filing cabinet. Oh, I have some services. I'm going to put it in the service folder. Oh, I just sold a product. I'm putting it in the product folder. So it really is documentation in that metal filing cabinet, but it's really hard to report on receipts and data in a filing cabinet. So you put it into an accounting program, and where you put it, all your folders and your file folders, is really your chart of accounts. Now, you've got your revenue, which should be customized to your revenue streams. You've got your cost of goods, which are the direct expenses that are that align with your revenue streams. And then you have a bunch of these operating expenses. So I don't know if you take a look at your profit and loss statement and look at it and kind of go, oh, yeah, okay, toss it aside and keep operating your business. It's because all of those expenses on the operating side of your business are all in one bucket, operating expenses. So insurance is next to meals, is next to benefits, is next to, you name it. And so it's really hard to kind of take a look at that and say, well, what am I looking at and what does it say? So we like to recommend that you reorganize your chart of accounts. Yes, did you know you can reorganize your chart of accounts? It does take going behind the scenes a little bit in your QuickBooks, but really it's not that difficult. So what we like to do is divide all of those operating expenses into 4 buckets. And that way, when you take a look at things, they're bucketed and then they add up, and then you can go, oh, I see, I spent that much on that big bucket. Now, how do you determine your buckets? It's operations. It's standard operations for a business. So what we like to do at Officeheads is we will create one bucket called comp and benefits. So any expense that you incur that has to do with comp and benefits will be then nested underneath comp and benefits. That's wages, benefits, payroll taxes, payroll fees, anything like that. Now think about it. If you've got a line on your P&L that says wages, comp and benefits, and all of the detail underneath it, and then it summarizes all comp and benefits, you know off the top of your head, or at least on your report, what you're spending on comp and benefits. Then it's so easy to grab a KPI, a key performance indicator, if you ask yourself, how much am I spending on my staff? The next bucket that we like to put into our operating expenses is operations. So the sub-accounts under operations would be rent, automobile, computers, security, anything that has to do with how you operate. The next one, really important, sales and marketing. So in there, you'll have, if you travel a lot, you'll have all of your travel expenses. And we like to even go into a little bit more detail other than just travel expenses to say air, ground, meals, miscellaneous, air, ground, meals, lodging, and miscellaneous. That way, when you're booking things, you can say, especially if you've got a lot of travel in your business, how much am I spending on air? How much are my employees spending on meals, taking out our clients and our prospects? That way you ask the question and it's answered very easily on your profit and loss statement. Next, so now what do we have? Our operating expenses are divvied up into a bucket of comp and benefits. The next one is operations, sales and marketing. The last one is general and administrative. This is your catch-all, but it can be a little bit organized as a catch-all. You're going to have office supplies. You're going to have insurance. All the other things that you have with your business will be in general and administrative. Now, if you take a couple steps back and take a look at your profit and loss statement, it will, and assuming also that you did reorganize and customize your revenue to what you actually do and your direct expenses as to the money that you spend to actually make that money, you're going to take a look at that profit and loss statement and it's going to ding, make sense. You're going to say, oh, wow, I've got 3 different things that I provide and I'm making more on the first one than I am on the third one. Maybe I should make some different decisions on how I deliver my product. And then you can look down and go, wow, I really want to only spend 40% on my people and my comp and benefits. This way it's all bucketed up and you can at a glance say, am I up? Am I down? Am I right spot on? So that's your chart of accounts. Your chart of accounts is the list of accounts that you choose to categorize all of your transactions and organize it so it makes perfect sense on your profit and loss statement. That way, your profit and loss statement was something you want to look at every month, not avoid. So there you go. There you have it. Monday Morning Metrics, talking about customizing your chart of accounts and the importance of a profit and loss statement. Thank you so much for joining me. Make some comments below so I know what to talk about next time. I'm just picking, I wake up on a Monday morning and go, what do I feel like talking about today? So I would rather talk about what you want me to talk about. So please leave some comments. I'll customize my future Monday Morning Metrics to you so you can help grow, so you can grow your business. Glad to be there and glad to help. So thank you very much for joining me. Have a wonderful and great and profitable week.